Okay, so welcome everyone to All Things Vehicle. We're going to talk a little bit about today. So I want to just start off with explaining to you what's happening. So you should have the screen and the presentation. You should have a little box of me chatting in between. So today what we're going to learn are the different ways to write off your vehicle, and we're going to talk a little bit about what the CRA requirements are. We're going to be covering all kilometers, even the ones you're probably forgetting that I see all the time. We're going to talk a little bit about the options on the logging, like, you know, that dreaded kilometer log. We'll talk about a little bit of technology, and some of you guessed, don't lie, I know some of you guessed when it came to tax season. And I'm going to talk a little bit about why that actually hurts you in the end. I always give out a bonus in my webinars. So if you stay till the end, there's a bonus about how to do your own bookkeeping. And we do have a course, which I'll tell you about a little bit later, but this is an actual module from the course, module 10 to be exact. And it tells you about how to do your own bookkeeping and sort of how to put it together, or whether you should be doing your own bookkeeping, because sometimes we shouldn't do it, especially if we're a certain size or a different type of industry. So stay to the end and I will give you that bonus for free. Excuse me. So just a little bit about me. So I'm an author, an educator, and an entrepreneur. I have an entrepreneur at heart. I've had several businesses in the end. I do have education in accounting, and I have a bit of a story about how I got to this place where I teach you guys. And if you want to see that story, you go to linweb.ca, which is my website, or eintel.ca, eintel.ca, and you go down to the very, very bottom of the front page, and there is a video there about my story, about how I got here. Rest assured, you can guarantee that I've been in a lot of places that a lot of entrepreneurs have. And now I'm on the other side, and now I do a lot of teaching and educating. So you are in the right place if you want to learn, my friend. So one of the things that I always start off telling entrepreneurs is that you're legally responsible. So in the whole process of doing all of your books and records and taxes, what you kind of need to know is that at the end of the day, no matter where the process falls down, you are legally responsible for the process. So if CRA is going to charge you penalties and interest, inevitably it ends up back on your shoulders. So just kind of keep that in mind. Sometimes I hear people say, well, my accountant didn't do this. And really at the end of the day, whether they did or they didn't is not the argument, because that's not an acceptable answer when things go wrong. 1 second. So another thing to know is if you went to 5 different accountants, you would get 5 different tax returns. And the Income Tax Act, yay big, is so subjective to interpretation. So everybody has ever so slightly little modifications. So what you want to make sure you're doing is working with an accountant or a tax preparer that really you gel with, that you understand them, and that you're getting good communication. Because in essence, 5 people could do it. You could get 5 different tax returns. Because we're talking about things which are very legal and very taxish, I always want to put up a disclaimer that please, 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 a lot of this is subject to my interpretation and how I see it based upon over 10 years of experience. But again, you always want to consult a professional when you deal with any issues around legal accounting or tax advice. So it's like to start off with a story. And in this particular world, one of the stories that I was thinking about, I thought, oh, what can I say in the webinar? One of the stories that came to light was a gentleman a few years back, and he had a partner, and they owned a consulting business. And together they did some financial consulting. And he traveled an awful lot, as a financial consultant would do, or any consultant for that matter. And in his travels, he would go see clients, he would stop, you know, get gifts and all kinds of stuff like that. Well, lo and behold, CRA comes calling. And they say, you've claimed vehicle expenses, so now we would like to see a copy of your log because you've claimed an awful lot of expenses. So he said, I don't have a log. but this is what I spent. And obviously I travel to clients all the time because that's my business. And CRA at the time said, sorry, you have to keep a log. Now, all of his expenses in his particular case, I believe the end result of that audit was that all of his expenses that he had put forward and reduced his taxes with for fuel and insurance and a depreciation on his vehicle, etc., and they kicked it all out and they said, nope, it's all gone. Unless you can produce a log, you can't claim it. And so that's what happened in his particular case. And then they went back and assessed the taxes and the interest going back. And they did go back a couple of years. And he obviously, he learned the lesson. But I always want to tell a story which is close to this because he's not the only case. He wasn't an odd one off. You do see that a lot. And we're going to talk about Canada Revenue Agency and sort of what they look for. And in his particular case, lack of a log meant that he was paying a whole lot more tax. So that's a great segue into talking about Canada Revenue Agency. So I took a screenshot, not that I need you to really read this or to look at this, but some of you are going to want to go do your own homework. So this is where you do it. I put a link on the right-hand side for you. And this is the page that talks about what you can do with your vehicle. It's one of the resources that we have to talk about the vehicle. That's what it looks like. Here's the link if you want to go get it. But we're going to talk a whole lot about it on this webinar right here. So the story behind vehicle records is you can deduct them as long as they are used to have business and that they're reasonable and that you have receipts to support them. Excuse me. So to get the full benefit, they say that you have to keep track of your records and you have to keep track of your odometer reading kind of at the beginning and at the end of the year. Okay, so you can sort of see what that says. I'll give you a minute to kind of absorb that. Excuse me, I have a bit of a frog and I apologize. Okay, so that's all sounds like a bit of a pain, but one of the really cool things that we're going to talk about in a little bit is that there's a simplified logbook. So short-term pain for long-term gain. So if you keep track one full year of reliable tracking, then you can use those numbers and not track. So if your business doesn't change, and let's say you're a real estate agent, for example, and you make $100,000 a year and you have $5,000 of expenses, well, if that doesn't change and next year you're making about $100,000 a year, then you can use the simplified method of tracking, which kind of means it's a little bit less of a pain in future years after you have tracked for a period of time to establish what they call a base year. So there's a little bit of light on the horizon, so to speak, which is really good. Okay. So the rules about how you are tracking is that number one, you need to have a vehicle log. And I can't stress it enough that it's a pain, and I get that it's a pain. I totally in agreement, but regardless, you still need to have a vehicle log. If it cannot be produced, then they likely, and I will never guess what CRA is going to do because, of course, they have the right to make whatever decision they like, but they likely will discount any kilometers and any write-offs that go with it. So if you can't produce a log when they ask for it, then you are subject to having that tossed out. And then what happens at that point is that they reassess your tax bill. So they will go in and they will say, well, you claimed $5,000 worth of expenses, so now we're not going to allow that. And then they re-tax you the money on what you previously had claimed. And then they charge you interest and penalties on those unpaid taxes, which can be a little painful, quite frankly, if they go back a couple of years. So that's sort of their rule and, what they are going to do. And But what about guessing? So let's talk about guessing. Guessing's fine until you get caught. It works, but it only works for that moment of time. Now, I don't know if if anybody on here had saw our blog about things that we as tax preparers know that you don't know, and this is one of those things. You guess, and you give it to us, and we put it into your tax return. And then before your tax return is sent off, you're going to sign a piece of paper which says you agree that the numbers are correct. So at the end of the day, that liability still falls back on you if they question it and you can't produce it. I always tell people, don't guess, because if you're ever asked, you'd have to produce it, and then you would get all the penalties and interest. And I shouldn't say when you get caught, I should say when they ask for it. But when you do, that guessing rarely passes the reasonability test, because you have to remember that lots of times Canada Revenue Agency is not asking you, hey, you just filed your taxes, can you tell us blank? What they're doing is they're going all the way back, and they're saying in 2014 or 2015, this is what you did, can you tell us blank? And that's really hard to remember. So guessing is risky. And if you have a system, honestly, there's really no reason to guess. But the other thing that guessing does, in my opinion, and I see this all the time when people claim their taxes, is they underestimate. And we're going to talk soon about the number one thing that I think people miss. But they'll go, oh, I don't know, I put on 15,000 kilometers maybe, and maybe 30% for business. And sometimes we get that. And, the reality is it adds up, and it adds up really fast. And in my opinion, lots of people do guess, and I think they lose an amazing write-off, which at the end of the day just simply means you're paying less taxes, right? So let's talk about that drastic kilometer log that just seems to never go away. And it's quite frankly, it's a pain. I get it. I have to keep one too. I totally understand. However, it's necessary and it's mandatory. In the whole process of keeping your kilometers, this is a piece that you have to do to properly claim and kind of be bulletproof with your taxes, right? The kilometer log needs to be reliable. Now, what the CRA says by way of their instructions is they say you need to have the date, the destination, the purpose, and where you are going. So, and the number of kilometers. So if you said, I went to the office supply store to get office supplies on today's date, it was 2 kilometers, that sort of, with an address. I mean, that sort of fills what exactly they need to do. But I don't know about you, but as a business person, I don't have time to write all that stuff down. I really don't. So I want to talk a little bit right now about the things that other people are doing, or what we've seen other people do, to sort of give you an idea of what the world is doing. Now, remember, I've had the business, I've done the accounting, I've seen hundreds of customers. And so this is sort of a bit of a compilation of what I see people do, the ones that are doing more than nothing or guessing. All right. And do keep in mind, I'm not saying that any of these are sanctioned by CRA. They're not approved. I'm just saying the kilometer log needs to be a method which is reasonable to show that you did in fact travel those kilometers, okay? Simply to give you an idea of what I've seen, but definitely not saying it's approved. This one, however, is exactly what they ask. And it's a little bit of a movie, technology be good. And so this will show you, this is a kilometer log in an Excel spreadsheet. So realistically, you're recording your information and it's dropping it in and it's putting the rate in. Now, ideally, if you had a report like this, you would do this once per month. Now you'll notice this says expense report, and there's lots of other columns here. So you could equally use this as an expense report. And surprise, this is going to come to you as a bonus at the end of the webinar when you get the email to tell you where to watch the replay. This link for this particular spreadsheet, which is beautiful. I love it. I use it. I've used it for years. This link will be in there for you. So no need to recreate your own. Time saver, so that's really good. So basically what you're doing here is you're recording it. It's giving you your reimbursement, and this meets the criteria for what Canada Revenue Agency needs and wants. However, who wants to do all that in the spreadsheet? If you want to do that, that's great, and it does double as an expense form. But I want to talk about a couple of different technologies that that I have seen and I like, so that you sort of know. Now, this one here is called an AutoTrack, and there's the link, autotrack.ca. It's a little square piece of equipment that plugs into your car, and it's an independent piece of equipment. It's a GPS tracker, so it tracks everywhere you go. This is the one that I use, by the way. I love it. I almost never have to look at it. When your vehicle stops for a period of time, and I think mine is set to 5 minutes, when it stops for a period of time, it logs that up to a website, and from the website, then all of your trips are on there. So you could print, you know, I mean, really, that's pretty bulletproof for CRA. I like being bulletproof. So if I could print at any point in time everywhere that I went, which I guess would be good for maybe children and spouses, but it's also good for your vehicle to track with CRA. There's a ton of information. It synchronizes kilometers. It would be really good for fleet vehicles, or if, like me, I probably travel 90% for business. I couldn't be bothered to write down each trip. I go into it. I pay somebody to go into it once a month, and we recapture some of the business trips, and it can do all kinds of things like memory, etc. This generally retails for about $34.95 a month, I think. Well worth it, in my opinion. This is my absolute favorite. There's also another app out there called Mile IQ. What I really like about this app, it's super user friendly. I mean, I have it installed on my phone as well, and I quite like it. I'm actually thinking, because my contract on the other one is coming close to being up, so I'm actually thinking of this one. What I love about it, it's supported by Microsoft. If you go to the Mile IQ website, you go all the way to the bottom, you'll see the little Microsoft logo on there, which is cool. It also uploads to a website, super user-friendly, gives you lots of notifications on the phone, and tracks you wherever you go. I just installed this one actually just this past week, and I'll be interested to see what it does to my battery. The reason I like the other one is because it has nothing to do with my phone, and doesn't kill my battery. So I'll be interested. Stay tuned. I'll let you know what that's like. There's another method which I call Outlook, and I actually use this one as well, believe it or not, because I live and die by my Outlook calendar. So if I don't have an appointment in there, I may not do it. So what I do is I put the appointment right beside every appointment. I put paid travel, and I told you that I have somebody who goes in once a month and finds this. And what they do is they look at my calendar and they figure out where I've been and how much of that is business. That works really, really well for me, but you know, hard to say. That might work well for you. So if you were asked to produce a log, you could produce your calendar, which would show every appointment that you had and the paid travel. You know, you would say paid travel. And of course, looking at paid travel 3 or 4 years down the road when the audit happens is still, in my opinion, fairly bulletproof. So I did this one for years and years, and then I had somebody look it up on Google Maps. Speaking of Google Maps, the method, Google Maps is my friend. And this actually, you see this actually quite a lot. So people will scribble down where they go, and then they, once a month or once a week, they'll go home and they will go into a search engine or into Google Maps, and they'll say home to whatever location, and Google will give them, you know, 23 kilometers, and that's what they record. So people do that as well. It doesn't mean that you traveled from home to that location. It means that if home was your office, I shouldn't say home, I should say your office. Lots of people that take my course though end up being, you end up being home-based businesses. So that's why I write home. And anyway, that's what they record as the trip. So that's another method we see. There's a method I call Monday to Friday. This is really common with people that go out of town to work. So what they say is when they leave town, they start the odometer tracking, and when they come home, they stop the odometer from tracking. It's not overly reputable, I'm going to tell you, because it doesn't match everything that CRA wants you to do. But we still see it, and it's used. Would it survive in an audit situation? I actually don't know. I couldn't comment. I've never seen anybody go through one that's used this method, but I'm just saying, if that's your method, not overly reputable, but it works-ish. Okay, so we're going to talk a little bit about when to track and what those expenses are. So the when says every time you travel for business purposes, you can track those kilometers. Now, the rule of thumb that I use, and we're about to go through a bunch of examples, but the rule of thumb, I say, anytime you get a piece of paper, that piece of paper might be a business card or a ticket, or, you know, it might be a receipt, but every time you get a piece of paper, you should have a log. You should be recording those kilometers. So let's look at some really common examples. Oh, sorry, the number one thing. Yes, in my opinion, the number one thing people do, and I see it all the time, is they don't track when they go buy stuff. So they will go see a client and they will track, or they will go to a meeting and they will track, but they don't track when they go to the office supply place, or if they, for example, if they go and they drop something off at someone's location. And I mean, and when we bring it up, the response always is, oh, I didn't think of that. That's super, super common. So, and that's what the problem is, I think, with guessing, is that if you're tracking, and human nature says, if you're tracking and you forget those little things, imagine what it's like when you're guessing and how much you're going to forget. So in this particular case, that is, in my opinion, the number one thing. Quite often when I go through people's receipts and I say, well, you bought office supplies on this day, or you went to your accountant on this day, or, you know, whatever they happen to buy, you bought supplies on this day, and you look on their log and it's just not there. So we can usually get those kilometers up, which is an amazing write-off, by the way. So that's always super good. Okay, here's some examples. If you're meeting someone, grab their business card, and that'll be a reminder. That's a piece of paper. A business card's a piece of paper. Always get that business card. Even if you just go to a business and you drop something off, grab a business card as your reminder that that is trackable. What about if you're delivering product? So what if your business says you have to deliver something, or maybe you are dropping off a brochure or an information package for someone? All of that completely trackable. So make sure that you put a log for something like that. How about lunch? Anybody go for lunch or go for coffee? That definitely is trackable. Office supplies, I've used this example a couple of times because it is the number one thing people forget, you know, when they just run out and do a quick errand. So you get a piece of paper, track that for sure. What about if you go for training, or you're taking a course, or maybe you're going to school once a week? Again, there's paper involved, let's track that. How about a networking meeting? Anybody out there go to networking? Of course we do, we're business people. So anytime you go to a meeting of any kind, make sure that you are tracking it. What if you drive somebody somewhere? What if you drive an employee home? Or what if you drove a client somewhere? It's trackable, track it. How about a social event? This is one that a lot of people forget, because social events, quite frankly, happen lots of times after hours. But if it's a social event that you're going to for business, track it. I'll give you a really good example. Where I live, they do an awards show once a year, and I really like the awards show. I like to see what local businesses are getting the awards. I really enjoy it. It's very social. You dress up, it's fancy, you get a ticket, you know, but I often forget I'm there for business. When I'm there, I'm networking, I'm meeting people, all of that contributes to my business. Track those kilometers, watch the social events. Sometimes they're kind of tricky, but they usually can be tracked. What about if you go to work? Uh-oh, this one, it depends. So I left this one for last because work is a special kind of tracking. This is a really hard question to answer because it depends on what your job is and what you're doing and where you're going. So I always have to say it depends. Get some advice on it. If you like, there's, inevitably, and I'll talk to you about this in a minute, I get lots of times people want to do just a half an hour coaching with me. This is hands down the most common question I think that I answer ever is what kilometers can I write off? And then it's always about going to work. The rule is that if it's your regular place of business, you can't necessarily track those kilometers. In some cases, when you work at two places, what I always say is if it's your primary source of income, but again, it depends. It's based upon, if you were to ask me the question, it would be based upon my knowledge, skills, and expertise from over 10 years of doing this, talking to hundreds of people, and I would say this is reasonable, because that's really what it comes down to with CRA, is what's reasonable. If you were to ask Bob Smith, the accountant, he might give you a different answer based upon his interpretation. So not only is your situation different, but also the how can sometimes be different. But either way, I strongly encourage you to get a little bit of advice around this work piece and whether or not your kilometers are a write-off or not. Okay, now just a little side note. We do have a course which I'm going to tell you about shortly, and there's a whole module on kind of talking about this and the write-offs, and we go into a whole lot more detail there. Okay, so the methodology. Again, this part is just darn confusing. I get it. But here's where the difference lies. If you're a sole proprietor, meaning you are the business, you just kind of started up and you call yourself, people pay you, then that is a sole proprietor. If you have taken the time to go out and to incorporate your business, then you're an incorporated company. The rules are different. So with a sole proprietor, the method that you do, which is also one of the methods you can do, by the way, with your incorporated company. So what the sole proprietor says is you pretty much have one option if you use your vehicle regularly. And that option is you record your kilometers for the year. Okay, so on January 1st, you would write down your odometer reading, and on December 31st, you write down your odometer reading. So your total kilometers, period, for that vehicle. Then you keep track of your business kilometers. So you, in the meantime, have done a log of some type, and you have an idea of how many business kilometers you've done, and that will create a percentage. Now, that's probably confusing. Let me give you an example what that looks like. So let's say the total kilometers for the year that you drove was 20,000. The business kilometers that you kept track of was 15,000. That is 75%. So of all the kilometers you drove, 75% of them were business related. Make sense? Okay, so that 75% now applies to all of your expenses. So if you had $4,000 of expenses, fuel, insurance, etc., 75% of them would be your write-off. Now, you don't need to worry about that piece. Your accountant does that piece, and they will do that on your tax return. But what you need to worry about is your total kilometers and your business kilometers. That's your job, is to track that particular piece. Now, this is also known as method number one, and method number one is method number one is used in an incorporated company. So this method is a sole proprietor only, that's all they can use. But now if you're incorporated, you can use this one, or you can use method number two. And method number two says you still record your kilometers on a per trip basis. So this is done by kilometer. You still record them on a per trip. You charge your company. So the way that that looks is you have a log and you would send an expense report. Go back to that expense report we looked. You would put it all together and you would say to your company, I travel 100 kilometers, let's just say, to these places. Because remember, the incorporated company is a different entity. And if you're kind of not sure what that means, our e-school, which I'm going to show you, our very first module talks about the difference between a sole proprietor and incorporated. So if you're incorporated and you don't really know what that means, that's almost a critical module because there's lots and lots of differences. Back to this. So you who owns the vehicle charges your company that rate. Simple and easy, an expense report, or you just list. And I showed you that video about what that expense report looked like, right? You're reimbursed at the rates that CRA sets out. So this year, this is the rate, 55 cents for the first 5,000 kilometers, 49 cents after that. And so you take 1,000 kilometers times 55 cents, right? That would be $550 or $55, sorry. And you get that reimbursed back to, that's not 55, that's 550, right? Yes, it is. You're not taxed on that. So your company pays you that money and you get reimbursed. So that amount is not subject to taxes, which is kind of cool. But there are rules around in an incorporated company, whether you use method 1 or whether you use method 2. Those rules I don't cover in here because every situation's a little bit different. So again, I urge you to talk to your professional in your life, if that's your accountant or a bookkeeper or a coach like myself. Make sure you talk to them and get the answers, what those rules are, so you can be set up. Now, by the way, one quick caveat on this. You cannot decide this at the end of the year, or you should not be deciding this at the end of the year. Vehicle usage and how you're going to claim it for that year should be decided at the beginning of the year because there's some ownership stuff which kind of plays in. So make sure that you definitely get some advice around that. Okay, so we have about 23 more minutes. So we're going to talk about what we've covered. We kind of talked about the methodology and what to track and where to track and what the general rules are. So I'm just going to really quickly check the chat and make sure, see what questions are in there. Okay. Okay, good. So what we have not talked about and what I don't cover in this webinar, strictly due to time, I could talk about vehicle for hours because there's so many questions with it and I get it. But there is the right implementation and the methodology for you. So am I using method number 1? Am I using method number 2? Because they both work, but sometimes one method works better than others. And it's not, there's no right answer. So you could have a brand new vehicle and travel very little. You know, maybe you only travel 10,000 kilometers a year, which is different than a brand new vehicle and somebody who travels 40,000 kilometers in a year, which is different from somebody that has a 2010 vehicle that they bought for $2,000 off, you know, an online ad that travels a little bit. Every situation's different. So we didn't talk about that today, which is why we can't necessarily answer that on the webinar. And the other thing that we didn't talk about, which isn't on here, but the other thing we didn't talk about is how to purchase. So, you know, do you do a lease or do you do a buy? That answer as well is very specific to your situation. And again, it depends on so much. So always make sure you get some professional advice sort of surrounding that. So from a resources standpoint, I always like to leave people with some resources. So before we get to the bonuses and your action steps on the things that I think you should do right now, here today, I just want to give you some idea of what we have in terms of resources. So there's an awful lot to learn. Can't be done in an hour. I wish it could, because I love, love, love to teach. However, we can, with a few hours of time, certainly give you some really good answers. So what are your options? Well, the first one, and I should put it first, actually, I do a lot of coaching one-to-one. And that, we're going to talk about that in just a second. It's on another slide right after this. But when you coach with me, you get answers super fast. We can do it in person if you're in my area, or sometimes we do it over the phone or on FaceTime or Skype or whatever we happen to have. And that's basically a one-to-one, ask your questions, you'll get the answers. Some people want to do a course, so they really want to learn, and that's what's on your screen right now. This is our eSchool course, and it teaches you, there's 12 basic modules, and there's a couple bonus modules, but it teaches you from the beginning. If you're a startup, this is super good. Like, say, modules 1, 2, and 3 are really good. If you're in business, the modules from 4 all the way down to about 10 are really good, like where you just want to get better understanding of what's happening in your business. And if you've been in business for a while and you think you got the rest, modules 11 and 12 are really good. Especially module 12. If you've been in business for a while and you think you're old hat at this, I bet you anything you're going to learn some stuff in module 12 that maybe you didn't know. So this is our eSchool. Now, some learners are a little bit, they want to learn hands-on. And I also run a live and online version. In the live and online, it is it's 6 weeks of weekly webinars. And we run them on a Tuesday. Well, they vary. The one that's running right now runs on a Tuesday afternoon. And you can also, you get a free copy of the replay, which you can completely do at your own leisure, which would be too bad. I mean, you could do the replay, but you're really going to get benefit because they're small classes. And we all chat together, we all talk together, and you're asking questions that are very specific to your situation, and you're learning from other people as well. We still cover all the content of the course, and you do get the course, by the way. It's included in it. You get all that content of the course. We'll have a Facebook group, and you get that interaction. It is live and direct. Now, this one here, the next live session starts May 10th, and this is a great session. If you're interested in this one, I strongly, strongly encourage you to register for this right away, because these often fill up, and they fill up very quickly. Now, you will get an email that comes out after this webinar, which gives you 30% off. It's limited time. You only get it for 3 days, that 30% off. But certainly, if you were interested in taking advantage of either of those, you just jump on. The email's got all the information, which you'll get sometime within the next 12 hours after this webinar. The coaching, there's 3 different types of coaching that I do. There is, basically we do the half hour or the hour, or sometimes you want coaching in groups. So occasionally I've had requests for people to say, I'd really like to learn from other people. And we try to get 3 people together so that you're coaching together. The group coaching is a little bit less expensive as well, which is nice. And up and coming, we are forming some mastermind groups. I think I just let a secret out of the bag. That is not on here, but it is coming very soon, which is super exciting. Okay, so there you have it. That's what I do and some of the resources you have. So let's now talk again about you. The action steps that you really need to take, the first and foremost is you gotta find out which method is right for you. Whether you're, even if you're a sole proprietor, even knowing, for example, here's one that I answer all the time. I teach at a local university here, and I teach some health professionals, massage therapists, etc. And I have lots of massage therapists in my practice as well, in my coaching and my tax practice. And inevitably, a massage therapist will say, well, can I log my method? Can I log my kilometers to work? And my answer is always, it depends. And what the right answer for one therapist is not necessarily the right one for another therapist. So I can't even group that together. Find out which methodology is the right one. Whether you're a sole proprietor or whether you're incorporated, this is going to be different. Just understand the way you're going to log them all year and the way that's the best way for you. The second step is, once you know that, now properly take the steps to do the implementation. So take the time to do the work. And I get it, guys. It's a pain. That's why I have that little GPS tracker I told you about, which, by the way, I don't get any commission on, to tell you. There's no kickback for me. But the reason I use that is, well, quite frankly, because I'm lazy and I don't want to write down the kilometers. But I don't know, that Mile IQ one, I'm actually testing it. And on my website, there's a page called Tools, which are all the tools that I really love and I use and I recommend. And that one's probably going to go up there because I'm driving on it so far. It's pretty good. Anyway, whatever your method is, take the time to put in the implementation. Believe me when I say you do not want to be caught on the other side of CRA saying, give us your kilometer log. It's a pain, it's expensive, and that's the last thing we need as business owners, is to deal with that. So find a way to put in your method and just implement. And after the first year, use the simplified method to make your life even easier so you never have to track. I'm not going to say for years, but certainly as long as your business doesn't change. If you're buying something, please talk to your professional before you sign the papers. You may put that vehicle into your business name. You might put that vehicle in your personal name. Do not assume that you should be putting it into your business name. That's a terrible assumption to make. So, and it may hurt you in the end, and it might cost you from a bottom line tax perspective. And I really wish I could go into that with you from a timing perspective. We can't. But please make sure you talk to your professional and you know what you're doing before you purchase or lease. And once again, every situation is different. I wish I could give you some rules here, but I just really can't give you some rules. So every situation is different based on your type of business. So take the time, talk to someone, get a good answer, and then implement. Okay. Choose how you're going to log your trips. So that might be the technology, or it might be the writing way, but choose what you're going to do. There's lots and lots of different ways. I was going to say be creative, but still follow the rules. That's what I really want to say. The hard part is putting in the system. I promise you that is the worst. That and the first 3 weeks are, they say habit in 21 days. The first couple weeks of getting used to doing something, unless, of course, you're using some of the technology, which really strives to make it a whole lot easier. So just take the time. I promise you that is the hardest part. The end result is that you pay less tax because you have a great vehicle write-off. You can't beat that system. That's the ultimate destination for a business owner, isn't it? Put more money in your pocket. Okay, Q&A. So when you registered for this webinar, you would have got an email which said submit your questions. So I have a few questions that came in, so we're going to cover those first. Right now, surprising, I have no questions sitting in chat other than a couple of comments, which is really good. So if you had a question, now would be a super good time to put it in. And in the meantime, I got 3 questions here that did come in prior to the webinar, so I will cover those. So the first one, Nora, thank you, says, what if I have 2 vehicles? Excellent question. So it again depends on your methodology, but I know Nora, so I know she is a sole proprietor. So we're going to go with that first. She's got 2 vehicles. It's the exact same for both. So for each vehicle, you should have a log. Starting kilometers, ending kilometers, and the business that you put into that vehicle. And then you have a second vehicle. Now, Nora, if I could share, and I hope this is okay, your business is a little bit more in the construction industry. So they have 1 vehicle they use for work and 1 vehicle they use for quoting. So that's really super important that you have 2 vehicles. Now, just a caveat here, Nora, if you ever decide to incorporate, that might change and probably will change. So that sometimes the decision that you make as a sole proprietor differs from the decision you make as an incorporated company. So hopefully that answered that question. Peter also said, is it better to buy or lease? I think we talked about this, but I'm going to cover it again because it's super important. So it isn't necessarily better to do one or the other. The right answer is the one that's right for you. It depends on your industry, what you do, how far you travel, what you're actually buying or leasing. There's so much that factors into it. And at the end of the day, if the objective is to pay less tax, that will be one decision versus having a different objective. So for example, even though I have a business vehicle, I always say, I never want to deal with the vehicle maintenance. I just never do. It's not my thing. I'm not mechanically oriented. So I will always lease. It's a good decision for me. And I will always turn my car over every 3 to 4 years, always. So that's my decision, which isn't necessarily the best tax write-off for me. And I get that, but that's my personal motivation. And that motivation is more important than finding the best tax write-off, because I don't want to be selling vehicle, all that jazz. I don't like it. So there's no answer. I can't really answer that question other than to say, talk to your tax professional who should ask you all of those questions, or do a coaching session with me, asking those questions, and then we'll figure that out. Anish says, I hope I'm saying that right. What if I have more than one business? Such a good question. I saw this come in and my material was already done for the webinar, but I thought, oh, I wish I had covered that. Such a good question. So if you have more than one business, again, you still need 2 logs. If you're a sole proprietor, this answer might be different than incorporated. So when we do the taxes, we have to do, in a sole proprietor's case, we have to do one kind of tax return form for business A and one tax return form for business B. And in those, we decide where your kilometers are going, but we can't make a good decision for you if you don't tell me where the kilometers lie, right? So for example, you might have 90% of the kilometers in one business and 10% in the other. So you have to give your tax preparer the information so we can do the very best thing with it. So you may want to make sure you have starting kilometers, ending kilometers, and 2 logs going on, one for each business. What a pain that is. By the way, I can tell you the AutoTrack for sure allows you to have 2 businesses. I'm not sure about MileIQ. I'm still testing it. Stay tuned. It's going to go up on my tools page on my website, which is all my favorite tools for entrepreneurs to use. So it's going to go up there. I bet you it's up there by the end of even next week. I'm liking it. I'm jiving on it. It's kind of good so far. But I don't know. I'm going to check that out and see if it does more than one business. Okay, other questions? We have one from Rebecca. Oh, okay, never mind. Wait, sorry, it's a duplicate. She asked a question, but we've already answered it, which is the 2 vehicles thing. Okay, excellent. So no other questions pending. Let's move on to our bonus. So for all the people that take our webinars, what we do is we have a DIY bookkeeping bonus. And this is one of the modules from the eSchool course. And it just talks about do-it-yourself bookkeeping. Now, the title's a little bit deceiving because what it's going to do is tell you, number one, some of the pitfalls about doing it yourself. So it's going to explain to you sometimes when things you have to be aware of if you're going to try it. It also will tell you how you sort your paperwork. So even if you decide not to do your books, this will tell you how to sort your paperwork so you can save some some bills with your tax preparer, because somebody has to sort it. It's either you or them. This tells you how a good way is to sort it. And then it also talks a little bit about being at the end, should you be your own bookkeeper? So when should you, when shouldn't you? This module is totally free, and you get it for always taking our webinar. And all you would do there in the email that's going to come out to you straight following this webinar, there's going to be a link to this course, and this is the page it's going to take you to. all you do is click that little join now button, and you will join into the course. And it's going to take you, when you hit join now, it's going to take you to this screen. Sometimes people get freaked out when they see this. Please don't be. All of my products are behind, I use third-party service to deliver all the courses. This is where you log in. And when you do this, you're going to be logging into that platform where the course is. So don't be concerned. It's not going to take any money. It doesn't ask for any credit cards. It is yours completely free for being here. So always end with a quote. 1 second. Always end with a quote. And what I say, that was a really bad screen share. Sorry, I wanted to sort of stop that and end up talking to you directly. I always want to say, a year from now, you're going to wish you had started today. If you wait till tax time, you're already too late. So start today, learn how to track it, learn the fundamentals that you really need to learn, and believe me, you will absolutely keep more money in your pocket come tax time. So I am Lynn Webb. Thank you so much for joining me. You can get on our website, lynnwebb.ca. That's lynnwebb.ca, which is the easy way to remember where to go to entrepreneurial intelligence. And stay tuned. We will have a webinar coming up next Wednesday, as always. In the meantime, stay profitable, be empowered, and keep more money. We'll see you next Wednesday. Thanks. Take care.